Hi everyone. Today let's talk about the OpenAI drama. Then we'll take a look at the calendars. Then we'll take a look at the charts, as well as my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So hundreds of OpenAI employees have threatened to follow Altman over to the Microsoft subsidiary. Microsoft announced that they were going to hire Altman to head their new AI division. Satya Nadella came out and said that he did not like what was going on over at OpenAI. And as a result of that, they went ahead and hired Sam Altman, and now we have a bunch of people threatening to move over to Microsoft, and then Microsoft throwing fuel onto the fire, saying that all of those people would have a job over at Microsoft should they choose to join. So this is definitely interesting. They mention here 667 employees have signed this letter, while OpenAI only has 770 employees, so nearly every single person at the company said that they were going to follow the CEO over to Microsoft if they chose to do so. And this clearly has a bunch of drama behind it. Microsoft is going higher on the news, which is interesting. There was a little bit of concern early that this might affect Microsoft, but now this is looking like a positive. Everyone likes Altman. His success has been prolific in AI, and now this is a possible bonus here for Microsoft to have their own division that they own completely instead of just being an investor in OpenAI. They also mention here Greg Brockman, the other co-founder of OpenAI, said he would join the company over at Microsoft. Again, another striking blow towards OpenAI. And then finally here they have the letter saying basically that the board has lost the confidence of all of the employees since they've pushed out Sam Altman and removed Greg Brockman from the board. And they do not believe that they have the ability and confidence of the employees to continue to be a market-leading AI company. And then they make some bold claims saying that they would like the entire board to resign. And you can see that here. They may choose to resign from OpenAI and join the Microsoft subsidiary, and they say they will take this step unless all current board members resign, and the board appoints 2 new independent directors, such as Brett Taylor and Will Hurd. I don't know who those people are, but then they mentioned to reinstate Sam Altman and Greg Brockman. So bold claims here from the employees of OpenAI. It seems very interesting that the board thought that they were more powerful than the CEO and the co-founder, where the employees clearly back both of them. Moving over to the economic calendar, much less exciting than the drama at OpenAI. 20-year bond came in at 4.78, much lower than the previous read, almost 0.5% lower. You like to see it. Looking at tomorrow, we have existing home sales at 10 o'clock, fairly interesting. And then we have the Fed minutes at 1400. That will definitely be interesting. That could absolutely move markets, and we'll see how that plays out. Moving over to the Fed rate monitor, I haven't talked about this one in a while, but I did want to highlight, you can see it's almost 100% chance that we pause at current levels for December. They have another pause priced in here for January, very, very small percent chance of a hike. And then going out to March, you can see the percentages start to tick down from a pause and move towards a cut in March. And then once we get out to May here, the highest percent chance is a cut. For the first time in this Fed rate hiking cycle, we might see a cut, and that'll be interesting. But really what I want to highlight here is all of these pauses are currently priced into the markets. If we get anything unusual from the Fed minutes tomorrow, then we could see a dramatic shift in market sentiment. And they did say that they were going to hike 2 more times, and right now they have only hiked 1 more time, and markets currently do not believe them. Moving over to Max Payne, you can see it's sitting at 441, total options 850,000, put call ratio still very high at 3.2. We are above this 450 call wall, top of the puts sitting up around 455, 456. Have another decent sized call wall here at 455. Again, understand that this is not a very big Max Payne. The big Max Payne was last week. And Max Payne really hasn't been holding very much weight considering that markets continue to melt higher despite all of these calls making money. So definitely interesting to watch here. Eventually this will matter again, but right now it doesn't really seem to hold a lot of weight. Moving over to the charts, looking at the S&Ps here on the hourly and the daily chart, you can see we had another straight up day, 0.74%. Took out these trend lines, took out my levels. Next level for me, 457.57. You can see we did just barely touched the trend line on the S&P daily chart. This is the hourly. You can see we broke through there pretty cleanly. But even if you push this one back out to the daily chart, you can see we're right at that level. You can see it here on the SPX. Sometimes these charts are just a little bit off from each other, so it is worthwhile to look at both of them. So on the S&P daily chart, we're basically at the same level versus the SPX. On the hourly chart, we are above it. So interesting to see here right at that level. We'll see if we push through it tomorrow. Maybe we chop along that trend line for a little bit. Could be interesting. But this is a pretty strong level. You can see this trend marked the tops here going back to October, marked tops here in January of 23, marked multiple tops through April, May, and then we did finally break through it here in June. Then it marked the bottom here in August, and then once that level broke here in September, then we pushed much, much lower. So this is a very strong trend line. It's been respected for many, many months. The question is this going to be an initial test, a pullback and a break, or is this going to be the top of this massive move? So from top to bottom, we are looking at about 10%, almost 11% on this rally, super aggressive on the SPX. And we've talked about it before, momentum starting to fade. You can see that MACD rolling over on the histogram. RSI absolutely overbought finally here on the daily chart, sitting at that 71.56. This is going to be interesting to see going forward. Again, all the indicators are still bullish. You do have to understand that. But we're at a clear area where we might find a little bit of resistance. Moving over to the NASDAQ, similar thesis here. We broke out immediately in the session, rallied up, took out the next level even, pushed all the way up to 191. And you can see we're there after hours again. We did pull back a little bit and then rallied back up. Next level for me, 392.35, continue to break out and move higher. Again, just continues to be a melt up. I was looking at this consolidation of 4 days in a row. Talked about it in the Sunday video as a possible island pullback. Just down to trend or even the 21 EMA would be interesting. Give us a little bit of an opportunity pullback on this move, but we're just not seeing it. Everything looks very, very strong. Continue to break levels to the upside, which is what you would want to see on the bullish side. And you can see here now on a closing basis, we are well above these highs from 19 July. And now we are setting our sights on these all-time highs. That's sitting all the way up at 403.73 for that level. You do have a wick high up around 408.50. But again, we are breaking out, looking at those all-time highs as your next resistance. Again, short-term resistance, 392.35. Moving over to the Russell and the Dow on the daily chart, both of these bullish. Not super bullish, 0.58 and 0.6 respectively. Russell momentum continues to step up, looking for a retest and break of this 200 SMA at 181. We'll see if that happens tomorrow. Everything still looks very strong here on the Russell. We did have that pretty big pullback, but then we got above 179.17, just barely by a few cents. After hours were up a little bit, watching for that breakout after that wick rejection on Wednesday last week. Next level for me would be 183.28 if we can get through that 200 SMA in that 181 area. Looking at the Dow here, coming off of that trend support, we talked about the test going back to Thursday and Friday, touched that level, opened up there and then rallied through the next one at 350.92. Then we have a level here at 353.62. Everything looks bullish here still, except for momentum. Momentum starting to roll over. This is more similar to what we're seeing on the NASDAQ and the SPY. Momentum slowing while we're still going higher. RSI, overbought conditions, definitely a melt up at this point. We also got above these peaks here from August and mid-September. Next high on a technical basis is going back to that 1 August level, which is 356.48. Moving over to Apple and Tesla. Apple leading markets higher as you would expect. Similar to everything else though, we're seeing momentum fade, RSI overbought conditions, not a great thing to see. If you look at this rally going back to April into May, you can see we hit overbought, pulled back slightly, hit overbought, pulled back slightly several times before we started to see that divergence. We saw a peak on RSI on 30 June. And then we saw a peak in prices here on 31 July, but that RSI read was much lower, not what you would want to see, clear divergence, and then we saw a significant breakdown. So we're in an area where you do have to pay attention. Doesn't mean that we can't go higher, so keep an eye on it. We are above the high now from 1 September, like I talked about. Next technical resistance up around all-time highs going back to 31 July. Moving over to Tesla, not a very interesting story. Went straight sideways on the day, sitting basically on top of the 21 EMA, stuck between 232.57 and then the 200 SMA at 239.37. Moving over to NVIDIA and Microsoft, we've been talking about these just about every video because they continue to lead markets higher. Microsoft continues to be in price discovery, making new all-time highs almost every other day here. NVIDIA also making an all-time high, especially on a closing basis today as well. Absolutely crazy here with markets going higher up to that 505 level after hours. And that's as we push closer to NVIDIA earnings, which absolutely could be a catalyst to push up to trend. That would be insane. Up to 545. But we've seen crazier moves with NVIDIA. Absolutely could do it. Do have to pay attention there. And then looking at Microsoft, like I said, all-time highs, continues to do it. And look at this volume, continues to tick up as Microsoft goes higher. And I do think that that is on the back of the new AI story and the AI subsidiary inside of Microsoft. Moving over to staples and discretionaries. Staples seems to have finished on this downswing that we were seeing. Still continues to hold above the 200 SMA, which is good. So we broke through it, pulled back, tested that 200, and then as it holds here and looks to push higher, that is a great indicator of strength. We are continuing to make higher highs and higher lows. Everything looks good. 55 EMA continuing to drive prices higher. Moving over to discretionaries, basically no change to the thesis. We pulled back here on Thursday, held that same level on Friday. We did rally up slightly from that level, but still in the same range that we've been trading. Continuing to hold that 166.78 level means that we can continue to look for a 170.68 test. So everything looks okay there. Momentum still bearish, but looks like it's starting to swing towards bullish. You do have to factor in RSI. Does not look great. So we broke down, retested, and we did break down here slightly on RSI. So not confirming the rally there, similar to what we saw here where we broke down, retested, and then broke down a little bit further. And you can see that follow through here. If we get something like that, that means we would push down to 162. So not a great risk reward. Stops are still sitting at that 166.78 area in my opinion. Moving over to tech and oil and gas. As you would suspect, tech has been on a massive run, leading markets higher. It does have a very similar thesis to the major indices. Momentum fading here slightly. RSI super overbought. But again, you can see we did that same thing here into May and June, where we continued to make higher highs really aggressively. Does seem like we're doing that again here. And then oil and gas, we'd been talking about this 200 SMA holding. We tested it about 3 times here now. Rallied off of that level, tested 140.88, rejected there a little bit. Momentum still looks clean to the upside. Want to see this roll into bullish territory. And I do think once we get that, that'll be a little bit of an indicator to push up here. So you have a double bottom right at that neckline. If the neckline breaks, then we could see a push up to this 149 area. Moving over to the 50 and the 200-day averages, you can see 50-day average basically flat, up 1.39%, but still within the same range we've been trading. 68.66 continues to hold. We pushed above it on the Friday session, almost tested that level and rallied slightly. You can see the doji here on the 200-day average. Momentum starting to fade almost into overbought conditions on the 200. We've been overbought for a little bit now on the 50-day average. Again, nothing goes in a straight line. Eventually we will see pullbacks, but right now we're not seeing that. And if we get above this 52 level, there's a lot of open space up to 58.90 in my opinion. Moving over the 2-year and the 10-year yield. 2-year slightly bullish, still in the same range, continues to hold this 4.8 level. I don't think this is really going to break down much from here until we actually get a cut, which we're not quite sure when that's going to happen. We looked at the charts on when the market thinks it's going to happen, but obviously we don't have any real sentiment behind that yet from the Fed. And then looking at the 10-year, continues to fall here. And looking at this a little closer, I needed to throw a structure on here. This is very clearly starting to wedge up. It's not falling nearly as fast as it had been. It's starting to show some support. Haven't gotten down to that 4.35 level yet. I would expect a test of that level. You can see that was very clearly a pivot point here on 22 August. Not there yet, but momentum, you can see it's starting to tick back towards bullish. If the RSI breaks above the SMA, that could be interesting. And if we start to see yields go a little bit higher, that's going to be bearish for markets. You can already see a little bit of that happening here on the 2-year. Definitely something to watch on yields. Moving over to the dollar, we got another big bearish day. 0.36%, got below the 144 EMA, got below the 200 SMA, took out my 103.64 level. Everything says this is going to continue lower here now. Next level for me 102.98, just below that 103 level. You can see that is right in line with this pivot low here from 31 August. Definitely interesting. Momentum continues to be bearish. RSI very close to oversold conditions. You do have to factor that in. But this looks great here for the dollar, continuing to push lower, meaning that equities are continuing to push higher on the back of this move. Moving over to JNK and TLT, you can see JNK, slight bullish day, continues to respect this trend line as resistance. Wicked it again, still holding there. Momentum fading, RSI fading. Definitely seems like this might roll over here soon. Back down to the 55 EMA, down at 90.15 could be interesting. And then you can see TLT, basically the inverse of the 10-year yield, wedging up, continues to respect that wedge right at resistance. If this breaks, then we can see a nice push up to the 144 EMA at 95.81. That would be interesting. That would push you back into this previous consolidation here, going back to August as well. That would be awesome. But right now, we're not seeing it. We're right at that level. Momentum says we could do it. You do have to look at that. But again, waiting for that follow through. Moving over to volatility, basically no change to the thesis. Move index popped up a little bit, not showing us much of anything after our test of that trend line. VIX continues to fall off. It's actually accelerating here today. Surprised we didn't see a step down on momentum for the VIX, but again, looks weak. Looking at these previous lows down around 1275. And then you have a level at 1177. We'll see what happens here. VIX getting into a region of complacency, but that makes sense considering that we are seeing a melt up currently. Moving over to my accounts, you can see I did okay. I should have done better. I didn't roll up as soon as I could have. I did end up rolling up and out. Got a little bit aggressive with it, to be honest. Out to 10 days and 18 days here, you can see $386 for $7.40 credit. So my max profit there now is sitting all the way up at $393.40. So that gives me about another $2.50 possibility over the next 10 days, or about a $500 profit on that position before I start losing profits. And that still gives me quite a lot of protection all the way down below 380. And then here, 383 for $10.32 credit, putting my max profit up at $394.32. Again, giving me about another $3 potential profit on that position, or about $600, while still giving me about 3% protection over the next 3 weeks on that position. Again, everything looks very strong, definitely trading in the bullish direction, but with a little bit of hesitation as we are very extended on this 10% plus move across markets. Let me know down in the comment section what you think of Microsoft and OpenAI and the drama between the two companies. Can Microsoft continue to launch higher on the back of this news? And where do we go from here? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.